Going to discuss about capital call. All right, what is capital call and how capital call works? So I'll give you a simple example which you can understand how capital call works or what is capital call and all. All right, so let's start about this capital call discussion. If I talk about capital call, let's say we have a two things. One is credit card. All right, one is credit card and another one is your contract. Now if I talk about credit card comes with, let's say, expiry. All right, you have applied for a credit card with HDFC Bank, and HDFC Bank offered you credit facility with expiry dates 2026, and also banks confirmed the 36% interest payment for per annum. So this is the facility. It means, let's say, limited partners or agreement details between bank and user. All right, after you get the credit card facility, you can, as a user, you can utilize that amount for any purpose, like investment purpose, daily expenses purpose, or any other expenses that you want. You can draw the amount and utilize it. Correct. Second, let's say you have approved facility of 1 lakh, but you have only drawn amount is 30,000, then bank will charge 3% interest payment on 30,000 only. And as a borrower, you will pay or repay the used amount. Used amount is 30,000 plus interest payment and charges to the bank. And if you see, pending amount in this case is 70,000. That becomes your unused amount. Unused amount. See, it's a very important one. Unused, it means on unused amount, bank also charge to the borrower unused fees. So it means borrower will pay unused fees on pending amount. And the most important fact is user cannot draw amount more than this, means 1 lakh. This is how your credit facility or credit card works. All right, now if you ask me questions, what is total commitment in this particular contract or in this particular credit card facility? Total commitment is total credit limit approved by the bank to the borrower. All right, and if you see, total outstanding amount to pay to the bank, which becomes 30,000, and 70,000 becomes again pending. In other way, you can say it's a dry powder, the amount which is available in credit card. You can use that amount at any point in time. So this is how your credit card works. All right, this is how your credit card works. This happened in normal life. It means your personal life. Personal life. Now I'll go to the private equity life. In private equity, you would see one is LP, another one is JP. Both sign agreement or contract with each other. All right, and contract defines terms. But contract defines terms of what? Contract defines terms of target funding. Contract defines terms of total commitment, and contract also defines terms of credit facility. Credit facility. Let's take the example. General partners approach to the limited partners for a credit facility of 1 lakh, and in initial agreement or talk, the interest payment was discussed with each other, and the 10% was the interest payment for per annum on only in case of used fund. And otherwise, if let's say general partners, let's say, don't use these funds, then general partners will pay upfront fees on unused amount. Upfront fees on unused amount. Let's say now both appointed fund manager, then fund manager will call, because once the facility is approved. So now let's say status is facility approved. once the facility approved, it means limited partners and general partners both are agreed with funding, and they have appointed fund managers to manage that funding. Then fund manager will initiate capital call. Capital call, it means fund manager will call to the investors or let's say lender to lend or that transfer that amount. Agreed means agreed amount, transfer that amount to the private equity fund. Let's say total commitment is 1 lakh and fund manager has called to the investors to pay 30,000. Then 30,000 would be eligible to incur or to get the interest payment on that 30,000 amount. So basically limited partners will receive 30,000 plus interest payment back. So at the time of repay, investor will receive used amount which is 30,000 as a capital, then interest payment as a income, and gain or loss as a business activity. So investor means limited partners will receive back all of this that benefits. All right, now here important is if you compare line by line with credit card. All right, same again, uncalled capital would be 70,000, where unused fees and the other the charges means maintenance or unused fees, it will be charged to the fund will pay it. Fund will pay interest payment and capital return on time to time basis to access more credit. Same here. Now if you see the capital called limit, this capital called expiry is 2026, and if you are repaying this capital earlier before the 2026, it becomes your capital means distribute at the time of repay to distribute capital, but that becomes to be again callable. Why callable, sir? Because the expiry of your contract is 2026, and if you distribute this capital today, so that becomes your callable capital. So it means again fund manager can call this limit. Here also if you see, if your credit card facility expiry date is 2026 and you have utilized this amount in the month of December, and let's say in the month of January if you are repaying this amount along with the interest payment, then that becomes your callable. So it means user will access same amount, right? Again it will pay it and access it, pay it, access it. So that depends on the user. Same logic, same pattern you can apply it here. Your capital funding process in private equity, it's like a credit card. Basically investors offer credit card to the limited partners offer credit card to the general partners or fund managers. Then fund manager access that credit card or draw the payment from the facility as and when required. The requirement, it means investments and expenses. If fund manager has any due expenses, then fund manager initiate capital call. If fund manager has any kind of investment opportunities as such, then again investment manager or general partners initiate capital call and ask fund manager investors to process funding as it was committed as per LPA. Same pattern, if you see, there is no difference between credit card facility and even capital call facility. Capital call and credit card both comes under facility agreement and both works in the same way. The difference that you would see in a credit card, as a user we only pay interest payment and capital, but in capital call or in a private equity capital process, we pay interest payment, means capital, interest payment plus profit and loss. So that's the difference. All right, here we don't sign any LP and GP agreement. We don't charge it, sorry, we don't sign it, but here we sign LP and GP. So it means we sign LP, limited partnership agreement. That's the difference. And if you come as a partner, so it means you will be responsible for profit and losses as well. Anyway, so this is how your capital call works. From interview perspective, you may see question around like, what is capital call? See, capital call, this call is a part of total commitment. or portion of total commitment. Why capital call? Fund manager initiate if fund manager has any investment opportunity and expense opportunity. Expense payment due. All right. How unused capital works? Unused capital, it's something like, which is a pending capital and yet to be draw from the facility or credit facility. All right. On undraw facility, upfront fees that will be charged on it and it will be recorded as a fund expenses. So this is how your capital call works. I hope now you got the understanding of capital call. Why I give the example of credit card, because credit card that you know it, if you understand the credit card payment process or credit facility process, same example you can replicate with capital call, and this is how you can understand the capital call process as well. See, nobody will tell you examples like this, and that's how I decode each and everything in my private equity course, live course. If you are interested, then you can join. I'll ensure that, right? So I have thousands of things around capital call. This was just a trailer. If you are interested, you can join my 2 months weekend training program that comes in only 30,000 cost. And that 30,000 cost will give you an opportunity to become a fund accountant, future private equity fund accountants, and earn almost 15 lakhs for per annum. Anyways, if you're interested, you can call me. I'll give you details. Otherwise, you can follow my free videos as well. Okay. So now jump on quickly the journal entry for capital call. Quickly, I'll just, because most of the people, they were requested. So I'll just decode for one. All right. Let's say you have fund manager call the capital, right? But investor confirm that later. Right, investor confirm that later, they'll process it and the due date is already passed on. In that case, if you have a confirmation, then that becomes your receivable. Then your accounting entry would be receivable account debit to share capital account credit if the capital call is due. In that case, you can post this accounting entry. But why we credit capital account, why we debit receivable account, that I'll decode in my course, along with the impact on balance sheets and P&L and everything. Then receivable settled in bank. Once that receivable capital settled in bank, here actually cash received in bank account. Cash is received in bank account. In that case, your accounting entry would be cash and bank account debit to receivable account credit. Anyways, we are preparing all the posting entries in LP. LP it means limited partnership book. All right, LP it means fund name. So we have posted, or we are preparing or posting all accounting entries in the books of LP. Now, just tell me, same entries, how will we post, or in which direction will post in investor account, right? So just gauge that and post your answer in comment section. Also post it your means view. I'll just give you a guess. It's like an assignment. All right. So just tell me how. Let's assume it. Receivable is confirmed. Is this 1 lakh, but the cash which is settled in bank account, which is this, against the receivable of this one. In this case, how will we adjust the records? Why this short fund, let's say, settled in bank account? So it's an assignment for you. Just tell me the reason why less funds settled in bank account and how we will adjust it. How will resolve this breaks? What would be the right procedure? Just tell me that in a comment section. This question is for you guys. Just do some work. You can visit my site ibfundaccounting.com, read the articles on private equity in details, and post the answer for this question. All right. So I'm done with the session. And if you like this initiative, don't forget to spread this awareness across. Right. My YouTube